Hello everyone, welcome to the section Candlestick Charts. These are the topics we will be covering inside this section. Okay, so what are candles? Candles shows us the movement of price because we are trading instruments and they have a price and the price moves. Okay, if the price has gone up, it is a up close candle. If the price has gone down, we call it as a down close candle. For example, this green candle is a up close candle. This black candle is a down close candle. Okay, so normally green or blue colors are used for up close candles. Red or black colors are used for down close candles. You can decide the color. But as a standard, those are the colors being used. Now, in an up close candle, we call them as a bull candle or bullish candle. If it's a down close candle, we call it as a bear candle or bearish candle. So up close means the price has opened, meaning the starting price opened, and then the price has moved up and ended up closing up. So that is, the price has moved up. So we call it as an up close candle. In a down close candle, what happens is the price has started at a price point. However, the price has gone down, like the price has moved down. So it has a down close candle. Okay, now when the price opens, for example, if it's up close, like when it closes it at a higher price, so up close means it closes at a higher price compared to the starting price. Down close means it's closed at a lower price after some time period. So that time period can be 1 minute, or this can be 5 minutes, this candle, or maybe after 10 minutes. It depends on how you look at it, what you select. So now when the price opens, sometimes before it go up, sometimes it can go down a bit, little bit, and again come back, and then the price can go up, but it can go further up first, and maybe it comes down and closes. So because of that, every candle will have an open and a low. That means the lowest price it went, and maybe it came back and it went all the way up, and the high, and then it came down and closed here. So every candle will have an open price, the low price, and the high price and the close price. The bearish candles also has the same open, and before it go down, it may go up a little bit and come back, and then it may continue down, further down like this, and maybe it comes back and closes. So because of that, there is an open price, high price, lowest price, and the close price of a candle. Okay, let's see what's next. Candles can be viewed from different time frames. So these candles, maybe it's a daily candle. So that means on a particular day, the price opens, and then the price might have slightly gone down, but then gone up and come and close as a up close. So this candle may represent the price points of a single day. When I say price points, open price point, the lowest price of the day, and the highest price of the day, and a closing price of the day, for example, if it's a daily candle. But if it's a 1 hour candle, then it's the same concept. The difference is it's the open price of that hour and the lowest price within that 1 hour, and the highest price within that 1 hour, and the closing price. It can be, let's say, a 2-minute candle. If it's 2-minute candle, this is the opening price at the beginning of the 2 minutes. Then the price might have gone low, high, and close as a up close candle. So it can be daily 1 hour, 15 minute, or any time frame of your choice. It depends on what you choose when you trade. Okay, so then the bearish candles, the down close candles also can be viewed in different. So if it's a daily candle, then that means, say in that day, the price has opened and closed down. Within that, it has gone high and come to the low and close. Then again, if it's a daily candle, up close meaning the price has opened and within the day the price has moved up. Why are we talking the price moving up and down? Because when we trade instruments, we are trading and then every instrument has a price and it moves up or down. Okay, so if the price goes up, what that means is there's possible buying happens. Like the price goes up because buying, like buy, because in trading what you do is either you buy or sell. So usually in up close candle there's a lot of buying happening. Then in a down close candle usually there's a lot of selling happening. Selling. So you can think this as a lot of buy side trades happen here. You can think here as a lot of sell side trades happen. We will look into that soon. Okay, let's see what's next. Okay, now in this process of forming a candle, it can form wicks. So wicks are these lines what you see in the two sides of each candle. Now in some candles you may not see the wicks, right? But in most of the candles you will see a wick. For example, if you look at this green bullish candle, see the price has started here. Let's take this one for example. This is green meaning bullish. That means the price has started open price, gone down and come back, then gone to up, high price and come back. So when the price opens and goes down, between open and down, open and the low, right? Between the open and the low, it forms a wick. And then between the high and the close, it forms a wick. Same in bearish candles, right? Wicks are formed. So wick is generated when the price is pushed up or down and when it comes back. For example, after opening, price has gone down. But then if it's pushed, the price has been pushed up again, right? By the algorithm, which means it has formed a wick. Wicks are useful to understand price action and we will use it a lot in the future. Okay, let's see what's next. So, once you understand candlesticks, then when you look at it as a whole, you call it as a candlestick chart. So, in a candlestick chart, you will see on some, let's say if this is a daily chart, for example, if it's a one-day chart, you can see on some days the price is green. Green means the price has gone up. Then I'm looking here and then over here on this day the price has gone down, the black candle. However, the next day the price has gone up because it's a green candle. So likewise, on certain days price goes up close candles, and certain days price goes down close candles. It depends on the buying and selling. So if it's a lot of buying happening, the price will go up. If there's a lot of selling happening, the price goes down. For example, in this area, these are all up close, huge up close candles, meaning there's a lot of buying has happened. But if you look here, in this area, there's a large number of huge down close candles, meaning there's a lot of selling happening. So in trading, it's either buying or selling. Okay, right. So let's look at some of the demonstrations. Okay, so now we are in a trading view chart. This is the micro E-mini NASDAQ index futures. Okay, so in this chart, if I want, these are the candlesticks, but if I want, first of all, I can look at it from a daily perspective. So if I select day from here, then all these candles I see are daily candles. So then you can see on some days, I can see on the micro E-mini NASDAQ on this day, it has been a up close day. That means price has moved up. Then next day, the price has again moved up. Likewise, moved up. Let's take over here. So if I'm over here, for example, price has moved up, green candle moved up, but next day the price has gone down. So bearish candle. So each candle is the price movement of a single day. So now it's clear to you. Okay. Now if I change this into 1 hour, from here if I select 1 hour, then what I see is each candle is an hourly candle. What that means is, over here, this is New York time 1 a.m. So at 1 a.m. the price has gone up. Then at 2 a.m. New York time, again the price has moved up. Bullish candle, bullish candle, bullish candle, bullish candle. But over here at 7 a.m. the price has slightly come down. Bearish candle. 8 a.m. price has gone up. Bullish candle. 9 a.m. the price has moved down. Bearish candle. Okay, likewise you can change the time intervals and have a look at the price from here. Like you can go into 2 hour, 15 minutes, 1 minute, 2 minute, likewise. Okay, and the next thing is, when it comes to this, these are candlestick charts. So you can click over here at the top and you can click and change this from, let's say, from candlestick chart into bar charts, for example. Or for example, from candlestick charts, you can change it to an area chart. However, when we trade, we mostly use candlestick charts because it's easy to visually see with the colors, that it's very easy to see, okay, these are bullish entries, these are bullish candles, these are bearish, likewise. Okay, and if you need to change the colors of the candles, it's easy. Let's keep the daily just so that it's easy to communicate. Okay, daily chart. Now if you want to change the daily candles, what you do is simply on trading view, right click, you click settings, and from here you can click and change the colors. It's that easy. Okay, you can set these colors. Right, let's see what's next. Okay, so these are bars. Okay, let me check on this. So these are bars, and when you look at it as a whole, it's known as a bar chart. So if it's a up close bar, then it's like, let's say you can make it green. If it's a down close bar, you can make it black. It's the same concept like a candlestick. If it's up close bar, mean it opens and the price has closed higher. If the down close bar, means the price has opened at a certain price and the price has gone down. So that means if there's buying happening, like if it's buy entries, the price will go up. If there are lots of sell entries, the price will go down, as I said earlier. Now the difference is, this is a bar and what you saw earlier are candles. But at the end, it's the same, like it's just a visual difference. So these are candles, these are bars. Some traders like to look at candles, some traders like to look at bars. So you got bullish bars or bearish bars. So you see the open and the close, here open and the close. And this is the bar chart. This is the exact same bar chart for the candlestick chart you see over here. This exact candlestick chart, pause it here, pause for a while, and then go and look here. This is the exact same, its only difference is one is a candlestick chart, one is a bar chart. Okay, let's see what's next. Okay, so we have come to the end of the section, and as a summary, you learn about candles. You learn that bullish candles means up close candles when the price is going up, mainly when buying happens. Then you learn about bearish candles, mainly when the price, that is when the price is going down, mainly when the selling happens. Then you learn about how wicks are formed, and the importance of wicks will be used further discussed in future trading exercises. And then you learn overall about candlestick charts, and then you learn about viewing candlesticks charts from different time frames such as daily, 1 hour, likewise. And then finally you had a look at the bar charts. Okay, so that's the end of the section, and we will see you in the next section.